I'm Ed Carson reporting to you live from our newsroom in Los Angeles. It is Tuesday, and today we are taking a look at two stocks after they issued their quarterly earnings reports, UnitedHealth and Adobe, and two other stocks ahead of their reports tonight, Netflix and CSX. But first, let's check in with the NASDAQ. We are up strongly across the board. The NASDAQ up 1.1%, while the Dow is up 1%, and so is the S&P 500. We have the NASDAQ and the S&P 500 retaking their 200-day lines, but I think the key question is, can they hold above that level?
Yeah, that is the key question. Yesterday we saw the S&P 500 retake the line and the NASDAQ come close, and then they reversed lower. It was a really bad finish. In a stock market correction, the classic trend is open up relatively strong and close weak. So we'll just have to see. I mean, this is the third day in a rally. Maybe we're going to keep doing, moving along, get a fall today in the coming days. But right now it's still be on the sideline and just paying more attention to stocks that might be setting up.
Exactly. I think that's a very key thing that you mentioned, that you not only want to see strong action at the start of the session, but you really want to see how we close. So throughout the day, be sure to head to investors.com for the latest, and the big picture, especially at the end of the day, will be one to read.
That's right.
And checking in with UnitedHealth, those shares are up 3.2% in heavy volume after the quarterly earnings report. We have a gap up above the 50-day line. Earnings up 28%, sales up 12%, in line with the same growth it saw in the last quarter, but a gap up today on those results.
Yeah, I mean, and one reason why we're paying so much attention, it's a Dow stock, but the managed care sector is doing really well, and UnitedHealth is a big part of that. It's gapping above its 50-day line. If you look at that blue line, that's the relative strength line. That's how it's doing against the S&P 500. That's at a new high. And so that one, the stock doesn't really have a buy point, and we're in a correction, but it's almost at a new high. Meanwhile, Centene and Cigna, they're both getting close to buy points as well. So definitely the stock and the group to look at.
Yeah, definitely a group to watch. And then we also have a software name interesting to look at, maybe some movers in the software group. We have Adobe shares up 7% in heavy volume on the earnings report after a trip to the 200-day line. We have earnings that came in up 57%. Sales up 24%. That was also about in line with what it saw in the prior quarter.
Actually, what happened is that they reiterated their Q4 earnings guidance last night, and that, I'm not sure maybe what really got them is the 2019 revenue guidance. They see 20% growth next year. It's not exactly clear why that was so dramatic, but maybe people are just really worried that software stocks maybe have got ahead of themselves, and Adobe saying, no, we still see growth. So Adobe bouncing today, bouncing from, again, like sort of around that 200-day line, still below the 50-day line, but definitely it's been a strong performer. A lot of other software names, Microsoft, Salesforce, some of those top-rated names, they're having good days today. I'm not sure if that's related to Adobe or if it's just that techs and the market is rallying, but it's positive action to see because software was such a strong sector for so long.
Definitely. Well, one stock in the tech sector that has been a bit of a laggard as of late is Netflix. Let's see if its earnings can be a catalyst for upside growth here. We have earnings expected to spike some 134%, while revenue projected to jump 34%. Those are still pretty strong numbers for the streaming service. Is there anything else that investors like to look at in a report out of Netflix other than that earnings and sales growth?
Well, it's really, and actually what seems to be the most important thing is subscriber growth. Netflix has said in July that they expected 5 million new subscribers this quarter, almost all of them international. Analysts are projecting for the fourth quarter that they'll have 7.18 million, again, mostly international. They underperformed on subscribers last quarter, and their guidance was not particularly strong, and so that's really what triggered the sell-off in Netflix. So those situations, Netflix, while it doesn't earn money, that's an adjusted number, it still burns through a lot of cash. I mean, the key is, can they add subscribers to such a point where eventually all that content and all those content costs, the marketing to promote that content, can they ever generate cash? But this is the first of the FANG stocks. It is important in that regard because this was really strong up until that last earnings report.
That's right. It's trading about 20% off of its high as it consolidates. So it still has quite a ways to go to climb up the right side of the base.
That's right.
And we want to take a look at CSX, which is also forming a base heading into its quarterly earnings report. Shares 6% below a buy point, below the 50-day line after a pretty big dive below that level a couple of sessions ago. But we do have earnings expected to jump 84%, revenue projected to rise 11% for the rail stock.
Yeah, I mean, CSX has really improved its operating performance. The rail stocks have been particularly strong. The economy is really strong, and they may be benefiting from the trade deals and also from higher fuel costs, maybe making trucking less competitive, because those stocks have sort of pulled back in recent weeks. CSX, it's interesting, the stock fell off through its 50-day, and a lot of rail stocks did, but then so did the whole market. Actually, the stock, the relative strength line on that stock is actually right around new highs. So that shows you, again, the market sold off, even the top stocks, because this was one that was really doing well. Hey, this is holding on, and then sometimes they falter. But maybe if the market gets back on, obviously this earnings report will be important for this and the whole sector.
Sure. Yeah, and our show yesterday focused on all stocks that were showing relative strength lines at or near highs, especially with market conditions as they are right now. That's definitely a key metric to just bring a little bit more insight in addition to the price and volume action that you're seeing.
And I would say UnitedHealth did very well in earnings, but Domino's, which we talked about yesterday, their sales and same-store sales were not strong. And so, this is one reason you don't buy in a correction, really, and you don't buy just ahead of earnings.
Yeah.
And so that would, Domino's is a good example of that.
That's right. Okay, everyone, for the latest market news and analysis, be sure to head to investors.com and check us out across social media on Facebook, YouTube, Twitter, and Instagram. Thanks for joining us, and we'll see you back here tomorrow.